And I think so all those ingredients are there. So it's a good mix for us to be here. But I think the ride in the next 2 years will definitely be far more, shall I say, diverse and different than what it has been in the last 2-3 years. Because
with me, I am Mr. Sameer Narayan, and Samir Narayan is the Chief Investment Officer. Thank you so much, Samir ji, for accepting a request. He is the Chief Investment Officer at Aditya Birla Alternative Equities. Well, Samir brings about more than 25 years of rich experience when it comes to equity investing, more particularly the Indian capital markets. So he is being the alpha generator, I would say. He brings about a very consistent track record of generating the alpha. And before joining Aditya Birla, he was heading the PMS at Invesco Asset Management Company, where he managed portfolio like Caterpillar and Value Rise and Down strategy for some time. And prior to Invesco, he has set up the Adani family office set up in September 2011. So he was on both the sides of the table, buy side and sell side, and he has varied experience. He began his career with companies like SSKI and Arm Securities and Motilal as well. Samir, thank you so much once again for joining the session. We have many investors who are there and eager to know your views on the market. So before I hand it over to you, let me just check. You want to put up a presentation out here?
Nahin, Vikas ji. I think firstly, thank you for having me here. It's always a pleasure, and I think we'll keep it interactive. I'm sure you have a very nuanced and intelligent audience, so I don't think I need to sort of tell them anything that they already don't know. So I would rather make it more interactive and a dialogue, because I think I've been given the topic of Kal, Aaj Aur Kal. How does the investing landscape in India look like? So I think it's something that all of us have our own views and opinions about. So I thought it would be better in case we sort of keep it interactive. Yeah, jaisa aap kahein, it's always, I would go by what you say.
Yeah, maybe we can start with your opening remarks, and then we'll deep dive to more about that. Yeah.
Sure. So Vikas ji, in fact, as the topic says, Kal, Aaj Aur Kal. Now, I'm sure as far as investing in India is concerned, Kal, Aaj Aur Kal, firstly, there is only one thing common. None of these three will be the same, because Kal alag tha, Aaj alag hai, or Kal alag hoga. So I think one thing which India perhaps signifies is change. And thankfully, even if you look at it, if you zoom out and see on a long-term scale, the change has always been for the better. But does it mean that, yes, everything is hunky-dory, everything is good? The answer is not. We'll obviously have a lot of things to sort of fix, tinker, tweak, improve price, and work upon. And I think as we go along, the best part is that the continuity in the policy making, continuity in the pace of reforms, I think that will maintain. Now, obviously, one of the big issues is that India has had a challenge in terms of what is called as a lower middle income trap. It's a result of the inequality of growth that has been witnessed hitherto. So if you see, we are already amongst the fastest growing economy in the world, but apart from that, the gains have perhaps not been as available to a larger section of society as one would have liked to. Quite simply because India का denominator बहुत बड़ा है. Because as far as growth is concerned, we would like that a lot of our brethren also take part in the growth that both the capital market shows, the earnings deliver, but वो ऐसा हो नहीं पाता. And I think that is something that the current government will probably want to fix as we go ahead. So that is answering the Kal part, as in tomorrow, because the whole issue about India is that we have not been able to break out of this low income sort of thing that we've been finding as in per capita अभी भी घूम फिर के $2,200-$2,300 के आसपास ही घूम रहा है. And I think that is where we would have liked that we need sustained period of robust economic growth for it to have the uplifting effect for a larger section of society. Now there are two elements to it, in the sense that we need a lot of low end manufacturing jobs, because and on one end you have the 2.3 million STEM workers who can be employed by our global capability centers, who are perhaps the smarter of the lot. And but the end objective is we need to be able to create good well-paying jobs for a lot of people, for them to then usher in consumption and the associated upsides that come in terms of an upliftment of a larger population mass. And I think that is where perhaps the larger focus will be in the immediate short term, both from a policy perspective and as well as what we as investors should look to be. Because कल और आज अगर हम देखें, which is yesterday and today, I think the entire uptick in the economy has been that yes, today India as an asset class makes a strong claim for itself in any global portfolio, simply because we are the largest landmass in the world, and we are perhaps the best placed population, which is the most tech savvy in the world. I think today the tech adoption rate of India is by and large by ahead of most of the population, even in the Western world, by leaps and bounds. So I think if you see things like the whole digital public infrastructure backbone, that has created a lot of goods which can then be utilized for, I mean, what is called as digital public goods. So I think that is where the next game is likely to be played. We've already seen quick commerce is one of the things. I think the next stage could be a lot in your credit percolation, your logistics. I think those are areas where you will see a lot of stuff can be tech enabled. And I think all that has to also dovetail into the fact that India needs to start working on fixing a lot of the factor market reforms. For example, your land, your agriculture, because I think now uh, that is relevant for unleashing the next wave of productivity enhancement at a population scale. Because as long as you have the GCCs, which are almost contributing $46 billion now to India's export surplus, or rather India's export services. But I think at the same time we need a lot of these shall I say better public goods and better quality government services. Because I think hua kya hai that in some level China has been able to sort of and I go back to the China example because that is perhaps the biggest stated or documented history of a large population mass which grew at say double digits for a long period of time, and which has now become such a large $18 trillion economy. So even though the aim for India is that yes, we will be a Viksit Bharat till 2047, but the shorter term task is that we will need to be probably leapfrogging from the fifth largest to the third in the next 5 years. So that is the roadmap that the policy and all the other enabling framework will follow. But बाजार का expectation at दूसरे level का है. So the timing mismatch could definitely give you a lot of shall I say room for disappointment and rejoicing, because in some stages जहाँ expectation बहुत ज़्यादा है वहाँ disappointment short term में आ सकता है, लेकिन जहाँ अभी एकदम disappointment है वहाँ policy could start enabling the creation of a long term bull market. So I think the expectation mismatch is one side of the paradigm. The factor market reforms is from the policy perspective, and I think the biggest factor is that today domestic money itself is such a large potent force, because that is where uh, there is a lot of yield chase, there is a lot of room for people wanting to look at investments in equity as an asset class for 3-5 year holding periods, and probably beyond, because that is where you will get compounding to work for you. And I think so all those ingredients are there, so it's a good mix for us to be here. But I think the ride in the next 2 years will definitely be far more shall I say diverse and different than what it has been in the last 2-3 years. Because if I break up the last half a decade, I mean from 19 to 20 you had the COVID coming in, from 21 to 22, you saw the recovery phase, and you saw India now coming into the entire services sector economy. And 23, 24 has been pretty much marked by the fact that a lot of things are happening on the global scene. I mean, at one level, you are seeing, Saudi will now start selling oil in other currencies apart from the US dollar, which is something that has not happened in the last 5 decades. So that's a different thing. That's the first time. Plus, at the same time, we are seeing that there is, the US debt is today reaching, gargantuan proportions. I think they are adding almost 3.5 trillion every year. We'll probably hit 100 trillion very soon. So the entire strength of the US dollar is something that the world is now thinking about, and hence the move to look for other stores of value like gold. And I think that pretty much dovetails into the fact that there is likely to be a alternative that will come up now, whether it could be a blockchain based digital currency, or it has to be backed by a hard asset or a commodity. I think that's the world will evolve into and morph gradually. But I think those are important questions that we as investors have to be mindful about, because those have implications for risk premiums for the country. Those has implications for sectors in which our companies that we are invested in or hope to be invested in are currently employed with. So I think that's the broad landscape that we see. And I think the best part is that uh, India, the for every positive about India, the exact opposite is equally true. I think that's the best part about India and India investing, and that I don't see changing. And as volatility perhaps goes higher, you're likely to see a lot of new sectors coming in. Some of them already have access capital markets. Today, the investing basket is quite large. I think if you look at the amount of companies that are today more than $5 billion, I think that's massive. It has gone up almost 2x in the last 4 5 years. So, and that's, we are talking of almost 40 45,000 crore market cap. So I think large businesses have now become public, are now available for investing. And India is a country where it pays to remain invested. It has always, at least hitherto, and we don't see that changing.
Sure. Um, Great. Lot of insights. So, my first question to you, Samir, is that globally you talked about that the debt going up to $100 billion, 100 trillions dollar, and at the same time we want to see some changes in terms of the strength of the dollar has to go down, and maybe you said rightly said that what we follow. But do you continue to see this trend where rupee continue to depreciate vis-a-vis other currency, despite doing so well?
Well, because I think rupee is perhaps the strongest EM currency, and it has been the case for the last couple of years now. So a part of that argument is also because there is a lot of strong domestic demand, which is not the case in China, because China is pretty much largely export-driven, fixed asset investment, generated model. So part of the strength comes from that, and plus you also have an event that inclusion in the JP Morgan bond indices will ensure that a lot of flow is headed towards our shores. So I think the we are not very negative on the Indian rupee. In fact, to our mind, the INR will probably be closer to the 70s in the next 5 years than perhaps south of 80s.
Okay, so you think so that uh, it is a target that you can keep it in your mind, 70s to 70.
Absolutely.
Okay,
Absolutely, because directionally the Indian currency is will remain strong and perhaps will get stronger.
okay, that's one. Second is when it comes to valuations, you know, why FPIs are not coming back to India. We saw $70 billion of outflow in last 2 years, particularly, out of which we've got about $35 billion in the form of FDI's money coming back, and $35 billion maybe in the form of FDI. If you keep that aside, because that's a separate mandate altogether, then net we are losing the overall share of the FDIs in India. Now, where do they have an option Where would the money going? What is your sense? Over to you.
Well, Vikasji, I think we see the FPI inflow outflow data on a very short term basis. Matlab, I think it will suffice to say the Indian investors are now waking up to the Indian equity opportunity. The FIs have been patient investors since way back in the mid 90s. So we have to look at even today their percentage of holding out of the free float of the Indian equity market is still a very high. They almost own half of India's free float here. So I would not say that it'll be perhaps not complete to look at their selling number in the short term, because it could be on account of various reasons. Because a simple reason could be India is perhaps the only market where they have sizable gains to be booked, जबकि बाकी सब जगह they've lost money, namely China. In fact, China in the last almost 2 decades, since the time MSCI China has been constituted, I think the dollar return, the Kager dollar return for any investor in MSCI China has been zero. So if he has to repatriate capital, if he has to have service redemptions in his home markets, perhaps India is the only place where he's making money है. So यहाँ पे उसका पैसा बन रहा है तभी वो थोड़ा बेच रहा है. And I'm not saying that we should not construe his immediate short-term selling as a negative or as a verdict that he's bearish, because at the end of the day, the MSCI weight of India, at least in the Asia Pac, has almost doubled. Yeah.
Yeah, it's
So
moved up almost 16.5%.
हाँ, so I think ऐसा ये धारणा कि भाई FPI इंडिया पे नेगेटिव है, I don't think there is enough data for us to sort of come to that conclusion.
Mhm. But when you look at the overall exposure, which was at one point of time 33% of the market cap, as the by virtue of market cap, of course, it has gone up, but their percentage of holding is going down. You see, so what is your take on that?
Well, विकास जी, I would love to see कि आज अगर वो हमारे लोकल वालों को बेच के जा रहा है, तो जब उसको लेना होगा तो हमसे आके दुगने तिगने भाव पे फिर ले लेगा.
Sure, sure. I understand.
I
The
would
other
I
thing
would
is,
I would hope to see that day.
no, absolutely, absolutely. um, Samirji, next thing is that when you saw China going from 3.5 to $7 trillion, and then eventually became $10 trillion. What are the 3-4 things that they did structurally? I'm talking about the major reforms they undertaken, which you think Indian government should undertake or consider going ahead.
Well, विकास जी, पहली बात तो चाइना मॉडल बड़ा अलग है compared to India. For example, that's more like a dictatorial, or shall I say, it's a command economy, whereas we are a true democracy in that sense. So if I were to look at that, I think China, by virtue of being a top-down driven economy, what they've done is that their education, their health, their infrastructure, and perhaps their judicial speed, that has which basically results into better public goods, that has been at a different scale and magnitude. So maybe that has actually helped them. But the other problem is that I think the decentralization of power and the fact that there is competition between provinces there, I think those all things are something that today the Indian government is also working on. For example, if you see the devolution to states from the central finances has now for the last decade been almost 42%, जो कि उससे पहले historic average 30-31 होता था. So it has gone up almost by 30% from in the last 10 years. So that is, we are on the way. But the fact is, by virtue of being a democracy, there are some things that can happen only at our pace. And that's the reason why our solutions will be very different from the way China has addressed those issues. But nevertheless, we have an opportunity that yes, we can tackle both the high-end service exports, because that is where the brain power comes in. So that is where your GCCs and your services export comes in. Along with that, we need to make the low manufacturing fire, because that is where a lot of the other population scale will get reasonably paying jobs and then get uplifted. So I think we have to work on both these legs, which is quite different from China, because China, what they did was they ensured the migration of people from farmlands to factories. So therefore, they created large infrastructure, and then they pushed for the export-driven model, and they were running large trade surpluses, and because they were the suppliers to the whole world, so therefore they were amassing reserves. So all that, maybe India may not be able to exactly follow the same path, but having said that, I think we have our own strength and very sustainable ones. So I think that is what we need to start doing. And I think the first of it is you need to fix the factor market reforms, which is perhaps the last thing that has not been addressed in the last decade. So maybe that's something that the government will take up.
Which one? Sorry, I missed it.
Factor market reforms, your land, your agriculture.
Yeah, yeah, correct, correct. So that is there on the card. I'm not sure what will happen. Our Honorable Prime Minister talks about the major reforms in next 100 days. So let's see how it works out. So have you undergone some changes in your portfolio post election, or it continues to be the same?
Well, because in fact we run very low churn, low beta portfolios. So we don't we don't take any action because there is an event, especially a large one. So thankfully, हमने अपने portfolio, I mean, we run a flexi cap strategy, which is a India special opportunity. We run a small and mid cap, which is the select sector. So we have not done any changes, and we are happy to say कि भाई ठीक है, uh, not being too aggressive or active has helped us. For example, the special opportunity has given 37% return on a trailing 1 year basis as of May end. Our select sector, which is a small and mid cap, has given 50% return. And if this you're getting with a beta of less than one, churn of about zero point 0.4, zero point 0.5, I think we are quite fine, and so are our investors, hopefully.
Sure. Your views on valuations. Yeah, market cap to GDP is 136%. The historical P used to be at 20, we are at 23, 24. Mid and small cap is at 27, 28 to 30. Some of them are. Your views on that?
Well, because I think valuation is at a point in time, yes, obviously one can say that the multiples in the broader market are perhaps more richer than the large caps. That's a statement of fact. But having said that, I think what one needs to perhaps, or what will be more relevant for returns going forward, is that what is the expectation gap towards the actual rate of delivery. So, for example, if today the problem, or rather the dissonance in India, the deviation will be, हम एक्सपेक्ट कर रहे हैं कि एक पर्टिकुलर कंपनी या एक सेक्टर 25% अर्निंग्स ग्रोथ करेगा, लेकिन अगर उसने 20% ही दी, तो मल्टीपल जो हमने आज उसको प्राइस कर दिया है, that is what will then stand to be at risk. I think that is the challenge. The challenge is not absolute valuation. The challenge is the gap between the expectation build up and the what it has been priced versus what the actual reality and the trajectory of it is likely to be. So, for example, in certain pockets of the market, if one is expecting 30% CAGR, अगर 30 नहीं आया, 25 भी आया, तो 25 अपने आप में खराब नहीं है, लेकिन क्योंकि आपने 30 एक्सपेक्ट करके उसको ऑलरेडी आज 50-60 का मल्टीपल दे दिया है, प्रॉब्लम तब हो सकती है.
जी जी. और अर्निंग्स भी कैच अप कर रही हैं. आप देखेंगे कि जिस हिसाब से आपने बोला कि अगर 5% का अर्निंग्स है, उस टाइम पे 2% टू 2.5% का अर्निंग चला गया, तभी मार्केट के बीच पे था. सो जब अर्निंग्स डबल हुआ तो फिर 40 का पी होना चाहिए. आई एम नॉट सेइंग दैट, बट आई एम सेइंग व्हेन यू आर डबलिंग दिस अप, सो यू शुड आल्सो डबल अप द वैल्यूएशन. बट री रेटिंग को लेके आपका क्या व्यू है? और ये 20 का जो जोन है वो 25 के जोन पे आगे जा सकता है क्या? व्हाट डू यू से?
नहीं, because in fact I think if you see, हर जगह the rallies have been very narrow, and not only in India, it has been across the world. मतलब अगर आप यूएस में भी देखिए, barring the top 6-7 stocks, even though there has been a broad swell in earnings, the multiples have not, or rather market cap accretions has not been very broad based, and that actually shows that it's like in the tech enabled world, the winner takes it all. So पहले क्या होता था कि भाई किसी का 25% मार्केट शेयर है, किसी का 20 है, किसी का 15 है, और बाकी सब 10 के नीचे है. आज क्या है कि किसी का 70 है और बाकी सब 25 है. So I think that is how perhaps the profit pools have now got sort of aligned, and maybe that's the reason why you're seeing that the rallies have got more narrower. And one would expect that, at least in case, see, India needs to grow not 8%, 9%. We need to grow at 6, 7% consistently for the next 8, 10 years. Because it is the consistency which is the issue. Because for the first time after COVID, when you had the sort of reopening trade के बाद 2022 के बाद, you are seeing that the earnings growth has been good for at least 2 consecutive years. You had a 15-17% earnings growth. Now the fact is you are seeing some moderation in pockets कि भाई ठीक है, कहीं कहीं अगर आप देखो मतलब the dividend payout ratio of companies in the last quarter actually fell, which means people are committing to more capex. But the other statistic is also that the private sector ka GCSF, which is gross fixed capital formation, I think that even today it is lower than 2011-12. So there's a long runway. So so even if we see the private sector investment as a percentage of GDP on the nominal terms has grown, has from 2020 पे it was about 20%, वो 23 के पास पहुंचा है. But the fact is that this has to grow for at least the next 5-7 years, and there is room for it, and there is resources for it. That's the best part.
Right. I want to understand when you construct the portfolio, Sameerji, what is it that you look at going ahead? You look at some of the sectors as a house. Do you have some views on that you're bullish on, or it's absolutely bottom up and no top down approach at all?
No, in fact, because we have a very, shall I say, practical philosophy. We firstly look for businesses which at least are delivering earnings growth better than the nominal GDP. Because हमारे हिसाब से अगर आपका 6-7% इन्फ्लेशन है, 5-6% की रियल ग्रोथ है, तो आपका 12-13% तो आपकी अर्निंग्स ग्रोथ नॉमिनल टर्म में वैसे भी ग्रो होनी चाहिए. So if a business is growing earnings higher than nominal growth, it is actually adding economic value on a consistent basis. So firstly, we look for businesses that are having a cost structure that is attuned towards delivering at least better than nominal GDP growth consistently. That is one. Second, we look for large opportunity canvas. मतलब a business should be able to grow for say the next 5, 6, 7 years. So a case in point being in our portfolios, we had bought Trent after COVID. We've still held on because we saw a runway for at least the next 6-7 years. So people have bought Trent now. We've been holding it for last 6-7 years. So I think that is when you go for a large opportunity canvas, you let yourself the availability of capturing multi-year growth, and you need to be also looking at non-linear growth businesses, because non-linear growth may for accessing that growth he doesn't need capital. So in such cases like Trent again, your multiples can expand. And last but not the least, हमारे कंट्रोल में खाली एक ही चीज है सर, purchasing at a reasonable price. The margin of safety is your cost of entry is your only margin of safety. So that is the only thing in our control. So therefore we run all our portfolios are low price earnings to growth portfolio. We low beta portfolios. So I think these are the kind of risk management that we consistently practice across all our portfolios, and at least it's helped us in all times, good times and bad times.
Sure. I want to talk about the component of GDP. So you have talked about last time that service is something which is becoming bigger and bigger, and agree is something which is going down. You continue to see the same trend going ahead, or any other view which is forming up?
Because in fact, so we had launched a services theme in October 2022, so that has completed almost 1.5 years, and we are very happy investors in that. But I think the services theme, so as I mentioned earlier, India can do both, because we can do low end manufacturing, which will help address the middle income trap, and we can grow the high end exports, which is your GCCs and your, I mean, today can you imagine that almost, I think in 2020 you had almost 40% of your GCC staff were engaged in doing ER&D or engineering research, R&D. But now most of them are now doing your renewables, your batteries, your AI. So all of the high end work can actually happen out of India, and somebody can get paid for it also locally. So I think India needs to fire on both. So we are quite bullish and we remain bullish on services, but we are also alive or sensitized to the fact that India needs to address the shall I say the K type growth. So for that you need to have the upliftment of a larger population mass, which will require manufacturing also to kick in. And agri, certainly, because there's a lot of our workforce is still employed on the farms, and but actually विकास जी उसमें बड़ा strange construct है that given the size of a country like India, imports are not actually an option which is viable for us, because nobody can make the amount of stuff that we need for ourselves. Only we need to grow it. So therefore, the yields have to go up, your productivity has to go up. So for that, there are hindrances like very uh, uh, the the farm ownership is very uh, shall I say low ticket. So you need to be having, how can you do mechanized farming? For that you need a lot of irrigation. So all that has to put in place, which is what I mentioned about the factor market reforms. So you need land reforms, you need agricultural reforms, you need labor reforms. So I think that is where it will then enable it to a large scale corporatization, which will then give you even a fillip on the agri income side. Because otherwise you will always be dependent on कि भाई monsoon अच्छा है खराब है, agri output ऊपर नीचे गया, and then you have to give support in terms of your food supply subsidies and things like that. Those are necessary. So I'm not advocating against it. Those are definitely necessary, because obviously there is a section of society that needs it. But if you have reforms going in those areas, you will be in a position to get corporates to then make sizable investments, which will then create a lot of jobs for across the population.
Okay, so with that, we'd like to conclude the session here. Thank you so much for taking the time out. Truly appreciate Samir ji. Thank you so much.
A pleasure, Vikas ji. Thank you as always for having me here.